Today on the show, I have the pleasure of speaking with another Aussie expat who is absolutely crushing it here in the United States, Mr. Tim Manson. Tim moved from Sydney to San Francisco back in 2012 and founded Property Connect, which is now listed on the Australian Stock Exchange. Pretty bloody incredible. Tim is also the chairman of the real estate sector of Founders Network. You definitely need to check that out at foundersnetwork.com. And prior to taking the leap of faith and moving to the United States, Tim was the co-founder and managing director of the Manson Group, a Sydney-based real estate development company, which is actually proactively invests in a wide range of industries, including listed and unlisted property trusts, mining companies, and digital and media technology companies. To top it all off, Tim has created Founders 400 here in the United States, which is a new technology company, and he is focusing his efforts on property development here in Southern California. An absolute incredible guy, huge amount of knowledge and experience and across a vast array of industries. And we're going to find out a lot about that and much, much more. But enough out of me. Let's get him out here. G'day, Tim. Welcome to the show. How you doing, mate?
Great, Reed. Thanks for having us.
Mate, let's rewind the clock a little bit. I've just given you you've given me an incredible introduction. I don't even know where to start, but maybe we can just rewind the clock and take us back to when you made your first ever dollar.
Yeah, sure, Reed. Well, growing up through high school, I used to spend most of my holiday periods working on site, working on the construction sites that my dad was building. And that really got me into the industry. And then as soon as I left high school, most of my friends went to university, went to college, and the biggest sort of advice I had from my dad was, you can't learn building from books and studying. So he said, you go work on site. So I literally started the day after I left high school on a carpentry apprenticeship and started labouring and did that for 3 years on site.
Wow. And so that was your introduction into the real estate game. And so talk to us to how you've gone from the tools into managing the Manson Group, because that's probably no small feat, right?
Yeah, sure. It was really something through the latter part of high school. I always, found building fascinating, even from an early age. I'd run around with tools when Dad was building our family house in southern Sydney. And so I always wanted to build, and it was just a matter of how to get there. And so during that period of doing my apprenticeship and builder's license in Sydney, I also was very fascinated in the stock market. Mm-hmm. And so I completed a diploma of finance in financial markets, I should say. And during that time, I was still living at mum and dad's at sort of, at 17, 18, 19 years old. So I would literally save every dollar out of, my paycheck was $6.80 an hour. And so I'd save every dollar and put it into the stock market and trade stocks, small amounts of money, but it was big for me. And so it really, I got to learn out of making mistakes. And I think that was a huge benefit for me. That especially both my parents let me do. They would really encourage me to do things, and that was the best way to learn. And so through that process of learning building on site and how to deal with tradespeople, contractors, basically it's like anything, it's a people business,
right? And
so there's so many different levels to deal with within the industry of development and construction. That's one aspect. The other important aspect that I found really fascinating was finance, and how you fund projects, how you get people behind them. And so that sort of come out of the finance side of it. And I was able to then, I believe, utilize those two sides to then, we created Manson Group in 2004. And its main focus, we'd consolidated a lot of different entities that were building over several years and utilize those assets to then build more. And the initial projects were self-storage, funny enough.
Yep.
Self-storage, my first block of land that we committed to and bought was in Melbourne, in the suburb called Noble Park. And we had an approval for a 750 unit storage community or complex, and we decided to take on a strata path with it and sell the units individually, which was quite a new concept at the time. And basically, you could buy a unit for as little as $15,000, and those units went up to about $160,000 by memory. And as we were gaining the strata approvals, we were pre-selling the units. We did all sorts of campaigns. We did a television campaign, radio campaign, print media campaign, and we were looking at selling the complex in 4 different stages. And we sold out of the first half of it, so the 2 stages, in 2 weeks.
Wow.
We sold $6.5 million worth of units in a couple of weeks. We had to put a call center on to manage the sales because the agent, the broker, couldn't handle calls. And little to know, that a few months later, we'd taken all these deposits. They were in the lawyer's trust account, and the local council or local government didn't give us the strata approval.
Business plan failed.
Yeah, so we refunded all the deposits. We were back to square one.
so just for all those people listening out there, strata, how's that the equivalent of condominium style stuff here in the United States?
Well, it's the exact same as a condo plan.
Condo plan, yeah, condo track map, yep, sure thing. Yeah. So all those developers out there listening, and they think they get a parcel of land and split it up into 20 little blocks. It's the same sort of idea. Strata, condominium, same sort of stuff. But mate, it sounds like you've got an incredible. A lot of people who listen to this show, a lot of people who get involved in investing, choose either stock investing or real estate investing. To have a foot in either camp, I think, and plus coming through the tools and the trades, really set you up for some pretty awesome career path, and we're going to get into that in a minute. But It's interesting that you've come through with your dad on the tools, but then you had that want and need to want to go and learn stocks. Tell me a little bit about that mindset, because as I said, me personally, when I first picked up the book Rich Dad Poor Dad, it was like, I know hard assets is what I want to invest in, not paper assets. And there's always that conundrum when we're in real estate investing. It's like, screw paper assets, come and invest in hard assets. You know what I mean? So how did that sort of mindset work?
It's all relevant really to your own personal need and what you enjoy the most. The biggest differences, and they all have positives and negatives. So I don't believe there's a hard and fast rule in what you should and shouldn't do.
Right.
It's about what you're comfortable with and to be honest with you, what you enjoy. If you don't enjoy it, you shouldn't be doing it because you're not going to be good at it.
Right.
And so if you enjoy researching stocks, if you enjoy looking at different industries and valuations and multiples and really getting into the depth of the business, that's where you should go. The downside of I'd say the negative out of the investing in the stock side of it is you don't have the control that you have investing in direct real estate for yourself. With direct real estate, it's always best to be near the site or be able to go and visit the site, being able to see it, drive past it. Those sorts of advantages definitely are a positive for the real estate side. But again, it just gets back to what you enjoy. And for me, I enjoy all those sides of it. I enjoy looking into businesses. I enjoy speaking with the management and dealing with it. I enjoy how the stock market works. And so it was just a more of a natural thing for me. When I do, in the last 5 or 6 years since being over here, I've done less direct real estate investing and building. I'm getting back into that now because especially the last 2-3 years, I've really missed it myself. Yeah. And so it's more out of a personal preference point of view, but I can't, I find it very hard to say, oh, well, that's better than this and this is better than that. It really comes down to your own personal preference.
No, I think that's a great advice for anyone out there. And same thing with me. again, I didn't have a knowledge of stocks when I first got and started investing. I was a structural engineer, so I was like already around people who were investing in hard assets. So it just made natural sense to do it. So yeah, I think you're really correct. You're really right. It's what you draw passion to. But mate, to talk to me now about the leap to the United States, because you obviously got a really cracking business in Australia. You decided to leave in 2012. What was that all about, and what were you trying to chase? I guess the American dream, so to speak.
That's a funny story. I'll give you the longer version. The short version is I got bored. So basically, we'd done very well in development in Sydney and Melbourne up until the financial crisis. And what was quite funny actually was leading into that a couple of years before, the residential market come off in Sydney, and had a lot of different things happening in the market around that time. But we were very fortunate that both Dad and I did think, okay, there's got to be some sort of correction coming around. So we really took a conservative path heading into 2008. Consoled a lot of debt that we had, and put ourselves in the best possible position. What was funny was our accountants back in 2006. We had most of our investment in direct real estate, and they were actually advising us to push into stocks more and more. And so when 2008 happened, we fired them because we didn't do that. And if we did do that, we'd be in trouble.
Right.
So there's a big thing of having a practical nature to it, and being over the top of your investments. But so after 2008, development really dried up. And see, I was 20. What would I have been? I was been 26 at the time, and going through that, and then after it had settled, development-wise, from a planning point of view, became very difficult. The good town planners that were working in the local governments during the better times and the years leading up had left and worked directly for developers and were making more money. So the councils had, really people that didn't know what they were doing, trying to approve projects, and it just wasn't happening. And then on the other side of it, you had a funding problem in that the competition, once Kevin Rudd put in a $1 million guarantee for the top 4 banks for deposits, it soaked up all the competition for finance.
Right. So
the big 4 banks in Australia then controlled it all again. And for me, being 26, to go out and try and get projects going just became very, very difficult. So it was more a strategy of, okay, let's wait. What do? We had a couple of years prior, 2-3 years prior, I'd started up a new division, which was called Manson Group Design and Construction. And that's what my brother runs today. And basically we were then building for mid to large size commercial players, particularly car dealers. We're doing service centers, showrooms, and a lot of them. And that business then really did well through that period, because those mid to large size businesses were actually increasing their market share during a time when everyone else was struggling. So it really did well. But by 2011, we were hoping the development side had come back by then, and it didn't. And so I still found myself not sinking my teeth into anything in a way that I was used to. So I got bored. I really got bored. And so I had a few ideas, having been in the industry for so long, around technology, and just felt the industry hadn't been really influenced yet by technology. And you look at any other big industry, it was really driving forward. And I was scratching my head around, we were doing projects, $40, $50 million projects, and taking huge amounts of risk as the developer, as the builder, and designing it, the planning process, taking on the handcuffs with the banks, and then a broker would come in at the end of it, an agent or a broker, and get their commission, sell the units, and have no risk in it. And I'm scratching my head. I'm like, this is crazy. And I've got a lot of friends that are agents and brokers and that. I'd constantly say to them, I said, I don't know how you do it. You feel like a crook.
What have you done here? Yeah.
They're taking no risk.
Right.
And I'm saying, oh, Jesus. So just things like that, I felt this has got to change. This technology is bringing a lot of information to people in a good way.
Right.
It's enabling people to be more involved in a process, more informed to make decisions. And so that really spurred on me to say, I've got to be part of this.
Mm-hmm.
And so I was actually on a boys trip in early 2012. It was a weekend to Las Vegas. It was an annual boys trip, and it was a 3-day weekend. And I spoke with a few.
Your liver survived by the sounds of it.
Barely. And so I'd spoken to a few buddies in San Francisco that had done well, that I knew through some mutual contacts. Mm-hmm. And they were in technology, not in real estate technology, in different types of technology. And they'd been in San Francisco for a while, Silicon Valley. And I was thinking of getting involved in technology at that stage. And I actually incorporated the business in Sydney and looked at doing it there as sort of like a side thing, as a secondary thing. And I'd started it, I'd put some money into it, started getting it built. The CTO, the Chief Technology Officer that I got at the time, was then looking to get $170,000 a year, looking to get, I think it was 20% up front, plus then, another 20 or 30% in the business once the product was built. And then we would have had to go get finance or funding. And I'm just scratching my head going, this is great. The business isn't going to survive with that cost up front and just giving away all the equity. So when I spoke to the guys in San Francisco, they said, no, they said, that's the Australian way to do it. That's not, you can't build a business like that. People just grab. And so I spoke to them. They said, look, I told them what I wanted to do. And they said, if you really want to, a startup business, the first thing to understand is 9 out of 10 of them fail within the first 3 years. Mm-hmm. And that's just a fact. And the sooner you realize that, the better. That's the risk. There's roughly a 10% chance that in 3 years' time, you're still going to be doing that same thing.
And that's startups, right? 9 out of 10 startups.
That's startups.
Right.
That's technology startups. And so you've really got a 10% chance of being still doing that project or that business in 3 years' time. So it becomes a matter of how do you minimize the chances of failure. Mm-hmm. Mm-hmm. And so they said, look, it's you can't do it as a side business. You need to be knee deep and give it a good go.
Right.
And to do that, the US has a much stronger ecosystem for supporting early stage companies than Australia does. Mm-hmm. Australia has wonderful people, wonderful technology, wonderful ideas, wonderful vision, but it's getting there. I've seen a huge improvement over the last 5, 6, 7 years, but it still doesn't have the same, as I said, ecosystem of support that the US has, and especially in the hubs of San Francisco, Silicon Valley, Seattle, Austin, Los Angeles, New York. They have areas where every coffee shop you go into, every restaurant you go to, every bar you go to, even on the street, every conversation is about tech startups.
Right.
And you are living and breathing it 24 hours a day, which you need to do.
And I guess from a startup point of view, and getting that 10% success, giving the failure rate of so many startup businesses, as you said, as your mate said, you can't be doing this half-assed, and you got to go full slog. So that was really your why, I guess, to come to the United States, right?
Yes, yeah, exactly. I put myself in a thing because I was comfortable in Sydney.
Right,
I had a great life. I was very comfortable. Mm-hmm. But being then 28 I think 28 or 29, I put myself in the shoes, and I thought, okay, in 5 years' time, if I don't give this a go, am I going to regret it?
Right.
Even if it fails. And so I honestly thought about that. I said, well, okay, 5 years' time, I'm going to give it 5 years. If this doesn't work, I can always come back and build again.
Right.
But if I don't do it and I'm still doing the same thing, and I'm currently sitting here on my hands, a bit bored, not having been able to get back into direct projects,
right?
Then I'm gonna then be, say, mid-30s, and I'm gonna think, I might not be in a position at that stage to take the risk on.
Right.
So that really made up my mind.
That's incredible. That's such an incredible mindset to say your fear of not giving it a crack is more than the fear of failure. And I think that's a really important thing for someone to say. What's Grant Cardone is, the biggest fear is unlived potential. And, yes. and it's so important as an entrepreneur. And, we constantly struggle with things. It's like, I could leave this secure day job of 6 figures and whatever. And as you said, a secure life, and you would have had it set, right? Or go off and throw all the spaghetti against the wall and see what sticks, right? Yes. In a completely new country, starting from scratch, no networks. And that's what this show is all about, is interviewing guys like yourself and other guys who've come here and just absolutely crushed it and given it a good old shake. Because the other thing of it is, being an outsider, you come to the United States, you've realized, okay, Australia doesn't have the support network I need to start this startup. I know I've got mates in Silicon Valley which can support it. So my downside risk is maybe a little bit minimized if you tried it in Australia. Would that be correct?
Yes, that's right. That's right. Because as I said, it comes back to a lot of things, but the cost of living, particularly in Sydney, really has a big detriment effect on the start of new companies.
Right.
It's a huge, because people have to have a standard of living, and with that standard of living being so high, they don't take risks.
Right.
And I know that in San Francisco, the last few years, that the cost of living is very high in terms of rent and housing, but everything else is quite cheap.
Right. Yeah, no, I completely agree with that. Yeah.
That sort of thing. So you can get by, and they have a lot of places like Startup House and things like that back entrepreneurs and you live in the office above. A lot of Aussies and Kiwis would do that. They'd move over and they'd live in bunk beds above the office.
Right.
And that's the commitment that people show in their belief of making something happen. And that's what you have to do.
100%. So, mate, talk to me about your view of real estate technologies. There's been a lot of disruptors in the industry. I've been working in construction for many years. There's modular housing. A lot of technologies are coming. Crowdfunding. You got Bitcoin now backing a bunch of investments from the finance side. Tell me what your thought is on, just as you said, you've identified this area of, to me personally, the real estate is still very much like, not the wild, wild west, but deals are still done over a handshake. Deals, with the physical assets. How is technology going to shape the future of real estate, from everything from financing to getting deals done to getting deals built?
Sure. So I'll give a little bit of a background of what's happened, and that really steers on where it's heading. So, funny enough, Australia with they're called ILSs, which is internet listing services, such as Zillow, Trulia, and so forth. They come around in the mid 2000s, 2005, 2006 here in the US, and as you know, there's the MLS system here, the multiple listing service that really held on to the inventory. So if you wanted to know what was for sale, you had to go through a broker, because the broker then had access to the MLS. The likes of Zillow and Trulia changed that. They enabled the average consumer over here to access those listings online. And that changed a lot for the landscape in US real estate. It took quite a few years and quite a lot of money, venture capital money, to back those consumer-facing sites to change that dynamic, because it really gave the consumer a lot more information and power to make decisions to move forward where before you had to speak to brokers. Yeah, you had to go through that path. And so the brokers then lost a fair bit of control in that process. That was the beginning of this entire piece of what we're going through now, is that brokers, which I believe will still have a position always, because it is a people business, and you've got to be comfortable. And it's just such a big transaction for people. Buying a house is typically the largest transaction most people go through in their life financially. But the role of that broker is diminishing.
Right.
There's a target. It's not dissimilar to cab drivers or taxi drivers 5-7 years ago, before Uber and Lyft come in.
Mm-hmm. Mm-hmm.
They had a target on their back. And the ones that have adapted and changed and come along with it win. The ones that turn their back to it and argue it, they're fighting a losing battle.
Right.
And so I feel that brokers are in a similar position right now, in that the ones that do embrace the technology and move forward are going to do very, very well. The ones that don't and stand on their heels and just ignore it and, I know how to do that, this is the way I do it, they're going to lose. Mm-hmm. They're in a limited time, and their commissions are getting squeezed. You got discounted models, such as Purple Bricks, really making inroads. And that's the way it's heading. So that initial shift with just a simple technology of online listings going from print to digital changed a huge area of the market on how people get into buying and selling real estate. So venture capital poured into those early stage internet listing services. They've all since been, a huge either shareholders or majority of shareholders in those are media companies. They saw that shift coming and have taken that print into digital, and were able to really get the distribution out there by using their existing media channels, so that people then know about, going on to Zillow and Trulia and so forth. So I saw a statistic not long ago that I think it's 98% of home buyers do use the online listing services for their real estate transactions. So it's said and done that's been widely successful. Venture capital money went into that, and that was the only really venture capital money going into real estate technology up until about 3 years ago, because the venture capital guys or people doing the investment, they understood that product. They understood the consumer-facing side of an ILS. The real estate tools underneath that actually function within the services of real estate, whether it be construction, whether it be transactional, better efficiency tools for agents and brokers. They didn't understand it. Mm-hmm. And so they weren't investing in it. If you look at the amount of venture capital now going into real estate technology, it's pretty much doubled every year over the last 3 to 4 years.
Wow.
And it keeps going. It's now, real estate is now in the top 5 categories in terms of amounts of venture capital going into it each year. And it's a highlighted industry.
So, and you mean going into it from a technology point of view, correct?
Yes.
Right,
yes.
Right.
And so in the next 5 to 10 years, we will really we'll look back in even 5 years, but you can imagine in 10 years, we'll look back and think, how the hell were we doing real estate that way? we really will. The amount of change that we will see will be astronomical.
Right.
Because you've got now, I'll give you a great example. Travis Kalanick, who was the co-founder and CEO of Uber, he left Uber last year. He's now started his own fund. And one of the 3 areas that it's focusing on, that fund, is real estate technology.
Wow. That's incredible.
So when you've got people like that openly saying, this is one of our 3 areas of concentration, you can bet the next 5-10 years there's going to be billions of dollars poured into it.
Right. So what sort of advice can you give to the average investor out there, knowing that this real estate technology is coming, the wave is coming? How do you ride it and surf it, or how do you get sucked out the back?
If you're in real estate, no matter what area, I was with a buddy the other day, had dinner with him on Friday night, actually. Mm-hmm. He was with a CRM business for the last 12 odd years. He's been in he's been in technology for, all his career. He's just late last year, he went from a large CRM business. He's now running a role for a real estate, a construction management software company for all of Asia Pacific. So he's made that jump because he sees the next 5 or 10 years with technology in real estate, and he doesn't know much about construction, right. but he's learning and he can see it. And so, again, you're seeing people like that jump. People within the industry, they need to embrace it. Mm-hmm. They need to really technology it's funny, technology is actually not an industry anymore. Technology is its own beast that has tentacles that reach to every industry. Right. It's different. It's a different mindset. So if you don't take it on, or as I said, whatever sort of game you're in, he's in construction software. So if you're in construction, if you're a general contractor and you're not taking on this new technology in software and development, you'll start to have competitors that will, and you'll be left behind.
Right. No, I think that's incredible. And I think I see it on the boots on the ground in the construction side of it, that it's all right now. Personally, I see a lot of technologies, from designing CAD and integrating and looking at clash detection on site to try and avoid, wastage and all that sort of stuff. But you still got the average, labourer who's maybe not keeping up. So you've got the technologies going forward, everyone on the financing, design, getting the deal done. Everyone's pushing forward on that, but you still got the construction lagging a little bit because the on-site guys just don't have that maybe skill set, which is then requiring the labourers to be more skilled, and have to have more tech, they have to have more learning, more schooling, all that sort of stuff. And that's where it's like, well, for the average person out there who is a carpenter or a concrete guy or a chippy, how do you move with the times? And I think your story about not actually formally going to university, you're in a prime example of you can learn. It's just you got to be willing to adapt and understand and embrace change, right?
Yeah, you got to be proactive with it.
Yep.
So if you're sitting there and you're labouring or you're on the tools with carpentry, plumbing, that's great. That's the best thing to do. You've got to be looking at, if you want to move ahead, you got to be looking at what's happening with technology. How's the industry changing? Who's using what? Who you speak to? And if you take a proactive approach to it and get yourself involved in it some way, mm-hmm. By using it or getting involved with some technology company. Like, for example, if you don't have money to put into it, if you're a carpenter or a carpenter apprentice, if you go and chase companies that are in construction management software, I bet you they will want to talk to you, and you can become an advisor in that business.
Right.
You'll get a couple of points of equity for advising them over a few years because you're the one doing it out on site. Right. But they'll want to ask you questions. Oh, when you get there at site in the morning, how do you check into site? How do you log into the site? How do safety procedures work?
Right.
They don't know those things.
Right. So they're technology guys, right? They write code.
That's right. They're after people to help them with that. And typically a lot of these, or every startup has advisors. Mm-hmm. And so, as a carpenter, you have a lot of value to those businesses,
right?
To help them. So there's all sorts of ways you can get involved, but it's about being proactive about it.
No, I completely agree. And I think that's great advice for someone out there listening to this, just thinking, geez, technology is just consuming. My job may not be here in 20 years time or whatever it might be, but you've got to be able and willing to, that old saying, you can't teach an old dog new tricks. Well, you're going to, that saying's out the window, because everyone needs to continue educating themselves about whatever's coming down the pike. So you can be ready for the next change, which is coming, which, real estate technology, it's going to be huge. So I think that's really, really incredible. Mate, I want to wrap up the show here, but just tell me, what do you got planned for the next 12 months and beyond, personally, with your own businesses and where you're headed?
Sure. Well, I exited my previous business last year. I've created a new company called Founders 400, which is really born out of founders being able to tell their own story and their own journey, to teach other founders, what the lessons are, and hopefully help the industry, and that as a charitable path on that as well. So that's a way of giving back.
Yep.
For a lot of founders. I've created a new technology company called HitX, which is focusing on optimizing the transactions, not only in real estate, but a lot of different industries. And also I'm enjoying getting back into direct real estate development here in Southern California, which I get out of bed every morning and really, really enjoy.
It's the smell of the concrete on the site.
Well, to be honest with you, I do. I really do. There's something about being able to touch and feel something coming out of the ground. And technology, don't get me wrong, technology is great, seeing a product come to life, but I still don't get that same feeling as seeing a building coming out of the ground.
No, but I think one of the biggest things that I've learned from just this conversation with you, mate, is you're adaptable. You know how to adapt your situation, but you're also true to yourself. And you're also creating ecosystems that can help support different pillars of the business, right? Not just the construction side or the acquisition side. You've got the technology side. There might be some other aspect of the business that you can create that's going to help you create essentially a more stable ecosystem of businesses for yourself, which will then create long-term wealth and all the other great stuff that comes along with it, and essentially legacy, which is what we're all about. So, mate, well, look, to wrap up the show, I always like to ask my guests to give me their top 5 investing tips. You ready to dive into it?
Sure.
Mate, what is your daily habit that you practice to keep on track towards your goals?
Good question. Daily track is I use a product called Trello.
Mm-hmm.
It's a Kanban board system, and I still have a notebook. I still use my notebook. I still handwrite, that sort of side. But I'd say Trello keeps me on track every day. Mm-hmm. I have the boards of, the priority things to do, what calls I have to make. And that keeps me on, the lists of what I have to do every day.
Yep, I think that's, writing lists. And I personally tried the technology side. I can't remember what I was using. I was using another software, but I'm an old school, I just like writing it down and then crossing it out. And then looking back at the day and that little simple, oh crap, I've done 10 tasks today. It feels good. It's a little win. It's a little I'm kicked. Because when being an entrepreneur is very lonely. So it's like, great, I've got 10 things done today. Fantastic. Pat on the back. Because there's always going to be up and downs. Yeah, exactly.
Yeah, exactly.
Mate, who has been the most influential person in your career to date?
Dad, without a doubt.
That's awesome. That's awesome. He's still going strong back in with Manson Company?
Yeah, he sure is. His background was in actually commercial graphics.
Oh, okay.
He built up a very successful business over 50 years, and then over his career would build, and then he got into building full-time in the mid to late 90s and took a step back in that business. But yeah, he's been, both him and mum, but Dad, from a career perspective in work, has really steered me with a lot of things. And, I speak to him most days, even now. I run all sorts of things past him.
That's awesome. That's a great relationship to have, and hopefully something that, you'll bestow upon your kids in the future or something like that.
Yeah, so.
Mate, what's the most influential tool in your business? You talked a lot about real estate technologies today, but is there any one tool that you love the most that helps you be successful?
My phone.
So many people on this show tell me that their phone is the number one thing. It's just so simple.
So I use a tool communication-wise. Don't get me wrong, email's great, we use a tool internally within the business teams called Slack, which has been phenomenal. It's basically instant messaging, which is, say, iMessage or WhatsApp combined with email in a business sense. You can put attachments in and all that sort of thing. And that over the last 2 years has been, a lot of communications done that way internally. That's been excellent. But I still spend most of my day walking around the outside of our office on the phone.
I think you're the one who actually introduced me to Slack. I now use it with all my analysts, and it's create a channel. It's uploading. It's easy. You can go back to that channel and look. You don't have to go through emails, and it's just it's a simple tool, but I use it, and thank you for introducing me. Mate, what has been the biggest failure in your career to date, and what have you learned?
Oh, I've had a lot of them.
Probably do a whole episode on that, right? Yeah.
Well, to move forward, you've got to fail.
Right, exactly.
That's the best way to learn. I'd say from a personal point of view, I'd say I trust people a lot, and so it has gotten me into trouble.
Right.
With either hiring the wrong people or working with the wrong people, and it's at the time you've got to do it. But I'd say that's probably in my past been the biggest side from a personal point of view.
How do you combat that now that you've identified it? What are you doing differently?
I'm a lot more cautious, and I'm taking a lot more mature approach to it. But before, you're young and you're so positive about things, and I still am. But you're so, that person handles that and this is that. It just doesn't happen that way. And it's only something you can learn over time. And just being, I think in saying that, you've got to put yourself in a position where you've always got a plan B.
100%. 100% agree.
And so it's funny because in certain situations, especially with a new business, with a new startup, sometimes or a lot of times actually you can't actually do that because you don't have the capabilities or the financial means to do it. So you do have to take risks, but at the same time, you've always got to be thinking, all right, if this doesn't work out, how do I go about it?
That's an incredible thing to identify in yourself. And I'm probably a little bit the same. And probably being expats as well, you come into a new country, you're really eager to get this thing going and let's, you sound awesome. Let's do it, and it's just jumping into bed a little bit too quickly. But no, I completely hear you what you said. Mate, to wrap up the show, last question, where can people reach you? They want to find out more about what you do, Founders 400, everything and anything that you're doing in your business ecosystem, because you've got a lot going on. So where's the best place for people to hit you up?
Email. And just email me at tim@founders400.com.
Fantastic, mate. Well, I want to thank you so much for jumping on the show. I just want to quickly summarize some of the big takeaways that, I took away from just interviewing with you. I think that the first one was, invest in something that you like, you're passionate about. Do the research. We talked about stocks and real estate earlier, paper assets versus hard assets, why you chose to go down that path. I think, obviously trusting people has been a big failure of yours, which you've identified. But also that the big one for me was the wave of technology is coming in real estate. You've got to be prepared. You've got to be willing to surf the wave. Otherwise, you're going to be sucked out the back. And you're in a prime example that you don't need fancy degrees. You don't need any of that sort of stuff. You just need a mindset in order that you're willing to change your mindset in order to grow, in order to keep up with what's happening in technology and particularly in real estate. And it sounds like an absolute incredible time that we're in to get involved with real estate technology. So keep, for everything from, as we said, from the transactional side to the financing side to the construction side and design, it's all changing and it's changing for the better. And it's trying to keep afloat as these industries are changing. Did I leave anything out there, mate?
No, I covered it very well, Reed.
Awesome, man. Well, thank you so much for dropping by. We'll enjoy the rest of your week and we'll catch up soon.
Thanks, Reed.
Well, there you have it. Another cracking episode jam-packed with some incredible advice and actionable tips. And if you want to see any of the show notes, head over to my website at reedgoossens.com. Make sure you click on the podcast tab. Thanks again for taking some time out of your day to tune in to continue to grow your investing IQ, because that's what we're all about here on this show. And we're going to do this all again next week. So take care, be safe, and remember, happy investing.